Good afternoon. Here is the strangest thing that happened in markets today. Samsung just posted the single best profit in its entire history, a genuine record, and the market sold it so hard that South Korea had to halt trading. A market-wide circuit breaker, the sixth this year, on record earnings. That is the whole tape in one image. Records on one screen, alarms on the other. Because for the first time, the market stopped asking how much these companies are spending on artificial intelligence and started asking what actually comes back. Let's get into it. Here's the board. The United States closed at records across the board on Monday. The S&P at 7,537, up 0.7%. The Dow above 53,000 for the first time ever, a record close, just after Alphabet was added to the index. The Nasdaq up more than 1%. Gold is bid near $4,100 on a soft dollar and a weak June jobs report. Bitcoin held around 63,500 even as its biggest corporate holder was selling. And overseas, the tell of the day, South Korea's market tripped a circuit breaker, down as much as 8% intraday on record chip earnings. The 10-year Treasury sits near 4.48% and crude is two-sided, a war premium fighting a supply glut. Now the signature segment, consensus versus the read. First one, everyone thinks the chip sell-off was about weak earnings. It was the exact opposite. Samsung reported around $58 billion of operating profit, the best quarter in its history, beating estimates by roughly 6%, and the stock fell as much as 10%. When a record profit gets sold that hard, the market is not selling the earnings. It is repricing the story those earnings are attached to. The artificial intelligence spending boom is no longer an automatic buy. That is high conviction, and it is today's deep dive. Second read, everyone thinks Michael Saylor selling Bitcoin is capitulation, the true believer finally cracking. Look closer. His company sold about 3,500 coins for $216 million, and it sold them below its own cost basis of roughly $75,000, at around $60,000, to fund the dividend on its preferred stock. This is not a change of heart about Bitcoin. It is the Treasury flywheel that only ever bought, running in reverse to service its own financing. That is a structural crack in the never sell story, even though Bitcoin itself held above 63,000, medium-high conviction. Third read, everyone sees tankers hit near the Strait of Hormuz and braces for an oil spike. Brent did pop about $2, but the same week, Saudi Aramco cut its official selling price to the lowest since 2020, and the International Energy Agency now sees the first annual drop in gas demand since the 2022 energy crisis. So a war premium is fighting a genuine supply glut. Do not chase the war spike. Absent an actual closure of the strait, the supply side caps it, medium conviction. Here is the tell, the single most revealing data point of the day. $58 billion, the best profit in Samsung's history, and the stock down as much as 10%, tripping a market-wide circuit breaker. That is the moment the market stopped clapping at the spending line and started interrogating the return line. The four biggest cloud companies are still going to spend around $725 billion building artificial intelligence this year, up 77%. The spending is still accelerating. What changed today is that the market finally asked what it earns back. Follow the money. On rates, the sell-side base case has hardened to no Federal Reserve cut at all in 2026. Evercore is holding a year-end S&P target of 7750 while explicitly expecting no move from the Fed. But that weak June jobs print, just 57,000 jobs, has also taken the hike case off the table. So the tape is pinned between no cut and no hike. Gold likes that stalemate. Bid near 4,100 on a soft dollar and steady central bank buying. The bond market, near 4.48%, is quietly voting that the hawkish case is fading. On market structure and the artificial intelligence build, notice what the Dow did. It hit a record right after adding Alphabet, which means the index itself is being rebuilt around the same handful of mega-cap names that are driving all the risk. This is a narrow, top-heavy tape. And on sentiment, our market and social monitoring shows the same split as the price action. Caution is being stated everywhere, valuations called stretched to levels seen only twice before. Prediction markets putting about a 15% chance on an artificial intelligence bubble bursting this year. But with volatility still near 16, that caution is being talked about, not yet positioned for. Sectors in play: memory chips. The bull case is a real artificial intelligence memory supercycle, with South Korea's giants reporting records and SK Hynix eyeing a $28 billion United States listing. The bear case is that the best case is already in the price, and Michael Burry is short Micron into that record. Energy, a Hormuz premium against Aramco's lowest price since 2020. Net, cheaper oil is a disinflation tailwind. And crypto. Saylor is selling the headline, but underneath, coins are leaving exchanges. A $2.5 billion batch of stablecoins was just burned, and BlackRock launches a new Nasdaq 100 exchange-traded fund Thursday. The pipes are constructive. On the radar, the single most important question for tomorrow: does the Asia chip route jump the ocean and hit the United States megacaps, Nvidia, Broadcom, Microsoft, or do American futures shrug it off? On Thursday, BlackRock launches an iShares Nasdaq 100 fund, a direct challenge to the incumbent, so watch the flows. Then the NATO summit in Ankara, with a possible breakthrough on Turkey and the F-35. And Japan's 30-year bond auction alongside chatter about a yen intervention that would ripple through global carry trades. For the scorecard, 3 new calls on the record. 1. The artificial intelligence infrastructure and power complex outperforms the pure memory chip makers over the next 2 to 3 quarters because the reprice is about return on spend and the durable rent lives in the toll roads. 2. Brent crude does not sustainably hold above $80 on the Hormuz premium alone because the Aramco price cut and soft demand capped the war spike absent an actual closure of the strait. And 3. Despite Saylor selling below cost, Bitcoin's on-chain flows stay net accumulation and Bitcoin holds above 58,000 through July. We date them and we grade them. So here's the question worth sitting with. All year, the market was terrified the artificial intelligence trade would finally break on some piece of bad news. Today it wobbled on the best news Samsung has ever printed. When records start getting sold, the question is no longer whether the boom is real. It is who actually gets paid. That is the danger zone the crowd isn't watching. Not the earnings, the return line. That's the daily brief. Today's deep dive is linked right below. This is Earl, one contrarian read a day. Subscribe.